In the early morning hours in Beijing, at 2:47 a.m., one of the quietest yet most powerful blows to the global financial system occurred. An order was delivered to the inboxes of China's largest exporters. From this moment forward, all settlements in US dollars are to cease. The world markets began to shudder. Bond yields soared, Wall Street tensed, and the global economy started to tilt toward chaos. 4 words, one directive, and the entire structure of the financial world began to crack at the seams. There were no loud declarations, no threats, just a pinpoint, silent strike. Now, across all the world's trading floors, one question lingers in the air. Is this how the dollar loses its dominance? Not through war, but through strategic silence? In April of the year 2025, the Ministry of Commerce of China quietly ordered more than 400 state-owned and private companies to halt all new payments made in US dollars. A leak, confirmed by the South China Morning Post, revealed that the directive was not a request, but a strict demand aimed at creating a systemic shift in the architecture of global finance. Bloomberg reported a 12.4% drop in dollar-based transactions in just 72 hours, sending shockwaves through global markets. This was not a simple adjustment of payment systems. It was the declaration of a financial war. ING called the move the clearest signal yet of the beginning of institutionalized de-dollarization of the global economy. Behind the directive stood a meticulously crafted plan. The rise of the yuan's share in global trade, the shift toward digital currencies, and the rapid development of alternative financial infrastructures, all are links in a single chain. By March of the year 2025, the yuan's share in global trade settlements had risen to 7.6%, reinforcing its status as an alternative reserve currency. The consequences of this directive extended far beyond China. Within 48 hours of the announcement, the yield on 10-year U.S. Treasury bonds rose by 38 basis points, reaching 5.09%, the highest level since the year 2008. J.P. Morgan reported sales of treasuries totaling more than $212 billion over 4 days, primarily from sovereign funds in Asia and the Middle East. The People's Bank of China had already been reducing its holdings in dollars since the beginning of the year, but this collapse marked a turning point, confirming the systemic nature of the change. Analysts from ING and Bloomberg emphasize, the world is not witnessing chaos, but a surgically precise operation. The dollar, once a symbol of stability, is now being seen as a risk factor. The US dollar has long been losing influence. In the year 2000, more than 71% of global reserves were held in dollars. By the first quarter of the year 2025, only 57.2%. The erosion continues, slowly but relentlessly, creating intrigue and tension. The prestige of the dollar is not disappearing through loud declarations, but through the daily practice of international trade. Saudi Arabia has begun selling oil in yuan for transactions with India. The share of the yuan in settlements for Chinese exports has, for the first time in history, surpassed the US dollar. The M-Bridge project, developed by China in cooperation with the United Arab Emirates, Thailand, and the Bank for International Settlements, enables instant international settlements without the use of the dollar. While the United States is still discussing the introduction of a digital dollar, the digital yuan is already operational, processing transactions totaling more than $250 billion per year. Against this backdrop, Donald Trump demanded that the Federal Reserve immediately cut interest rates. But this action triggered a wave of capital outflow. During the third week of April, $76 billion exited the United States, appealing to emotions, billions of dollars slipping away like water through fingers. The rate cut further undermined confidence in the dollar. Mohammed El-Arian warned, a cheap dollar will only accelerate capital flight into gold, the yuan, and other assets. In the currency markets, for the first time in 40 years, the dollar fell simultaneously against 3 major currencies, the yuan, the yen, and the ruble, creating intrigue and tension. Control over the global financial system is beginning to shift into other hands. According to the Lowy Institute, as of the beginning of the year 2025, 128 countries conduct more trade with China than with the United States. Among them are Germany, South Korea, the United Arab Emirates, Australia, Chile, and others. China's exports in the first quarter grew by 8.9%, while U.S. exports declined by 3.2%. Beijing's new agreements in Asia, Africa, and Latin America are shaping a new global order. Meanwhile, the United States has not signed a single major trade agreement since the year 2020. The America First policy has resulted in diplomatic isolation. Provocative assertion: America is not so much losing the trade war as it is abandoning it by choice. The U.S. federal deficit for the first 4 months of the year, 2025, has exceeded $1.3 trillion. Foreign central banks are reducing their holdings of American debt. The share of treasuries in their portfolios has dropped to 38.6%. Even Japan and Belgium have cut their holdings by 11% and 14%, respectively. Saudi Arabia has reduced its investment in U.S. Treasury bonds to the lowest level in 9 years. Appealing to emotions, trust is not lost in a day. It is destroyed over years of incompetent governance and aggressive economic policy. The U.S. economy is cracking at the seams. GDP has declined by 0.7%, real wages have fallen by 2.1%, the credit card default rate has reached 3.6%, small business bankruptcies have risen by 18%, and mortgage delinquencies have increased by 12% in a single month. The ISM index has fallen to 44.7. Export orders have declined by 9.3% over the quarter. U.S. ports are recording a 27% drop in volumes compared to the previous year. Creating intrigue and tension, Boeing has lost orders worth $14.2 billion. Insurance companies are lowering limits on American exports. If trade stops, politics becomes meaningless. And most importantly, if China is orchestrating a quiet revolution while the United States saws off the very branch it is sitting on, who will lead the world tomorrow? A promise: the consequences will affect more than just Wall Street. They will be felt in pensions, wages, and prices in every American home, creating intrigue and tension. But perhaps this is only the beginning. Appealing to emotions? Share your opinion in the comments. Is the world ready for life after the dollar, or is the United States writing its own financial obituary?